We have finally done it. Today is June 8th, 2020, and I've now reached the goal of having $200 a month in passive income from my dividend portfolio. All right, so just to recap everything, I started my Robinhood challenge way back in 2018. And since I documented everything, you guys can see exactly where I started from. And I just watched a few seconds of that video and I could even finish the rest of the video. So this is the first original video that I started the Robinhood challenge. It was September 13th, 2018. All right, so less than 2 years later, we have now reached the annual dividend income of $2,409. So this has come to a pretty big surprise to me because a lot has happened in the last 2 to 3 months. A lot of it has been bad, but also a lot of it has been pretty good. So if you guys are brand new to the channel, my name is Bruce Wang and I love dividend stocks. I'm trying to create a new source of passive income from dividends, and I reinvest every single week. Right now, I'm currently investing roughly $1,000. When I first started in September 13, 2018, I was investing $100 every single week. So just saying that sounds pretty crazy. I'm investing 10 times more than I originally started. And a lot of that has to do with the confidence now that I have, because I have 2 years of experience in the stock market and just learning through trial and error some of the stuff that I should be doing and a lot of the stuff that I should not be doing. All right, so let's jump right into the video to see how I'm generating $200 every single month from my investment portfolio. So for anybody that hasn't signed up yet, you guys can get some free stocks from Webull, from Robinhood, and you can see my entire portfolio on M1 Finance as well if you guys want to. Links are gonna be in the description, and when I mean links are there, just scroll down there at the bottom of this video. You can start investing right away. The first links are usually the links to my M1 Finance portfolio. You guys can see everything that I'm investing in. Simply Safe Dividends is the dividend tracker that I've been using. I know a lot of people ask me, what is that? What is that? So go in there. That's this link, Simply Safe Dividends. You get 14 days free trial. Webull, you guys can get 2 free stocks. Robinhood, you can get 1 free stocks. All right, that's gonna be the last thing I ask you to do other than smashing the like button for $200 worth of dividend income coming your way. All right, let's jump into the portfolio now. So today my portfolio is worth $63,000. This is my total investment portfolio when it comes to all the stocks that I hold, all right? So this is including from the Cash App, this is including from M1 Finance, my Roth IRA, my individual accounts, this is from Robinhood as well, and from Webull. Yes, I am still using Webull even though it's not my favorite brokerage. So we add all that up and we get $63,300. And all of those stocks are also providing me $2,400 in annual income. This is all the dividends and this is the monthly breakdown. So these numbers are increasing week by week by week. All right. And with all the dividends that I'll be receiving, I'm putting that back into the portfolio. I'm not using it to spend on, Starbucks, McDonald's or whatever. I would like to, but I'm going to be doing that later down the line, maybe in about 10 years or so. So I'm going to address one question that I've been getting asked a lot over the past year that I haven't addressed until now, okay? So I get asked a lot, why am I going to invest such a large amount of money, $60,000, $50,000, whatever the case may be, and only receive such a little amount in return when it comes to dividends, all right? So when you look at it, I'm investing $63,000 and I'm only getting $2,400. What you guys don't really see on a week-to-week basis is how much capital gains I receive. All right, this market has been completely insane. Everybody can agree the markets are just going up because of pure fear of missing out, also known as FOMO. My portfolio has grown over the last month, basically about $5,000 in capital gains. This also doesn't really take account for when my portfolio was down over $10,000. Okay. So in the last week, I made a capital gains of about, I think it was like $6,000. So I'm gonna jump back to one of my more popular videos from last week, Dividend Stocks to Buy in June 2020, Hold These Forever. So I put this out on June 1st, which was about 1 week ago. And on that update, my portfolio was sitting at $57,300. And this week, I saw a capital gain from last week, about $6,000. 1,000 of that is actually from me reinvesting into the stock market, and 5,000 of that just came from the portfolio. So all dividend investors do this, all right? We take all the dividends from the companies that we invest in. Those guys, they reward us for investing in their companies, and they give us a share of their profits. That is what a dividend is, all right? We all do this, all right? We take that money, reinvest it into the portfolio. Compound interest over a long period of time. For me, it was 2 years, and my portfolio has grown so much, all right? So I can only imagine if I did this for 20 years, how much bigger this portfolio will be. I'm at the pace that I'm going, I might possibly be able to reach a $100,000 portfolio by the end of the year if there's no crash. If there is a crash, it's going to be a little bit slower for me to get there. So answering the main question of why am I investing so much for so little? First off, when I first started, I was only investing about $100 every single week, okay? So it looks big now because I put in the work a long time ago, all right? It might be mind-blowing to you. I don't know if it is or not. When you start small and slowly and consistently build up your portfolio, it's going to look like a gigantic portfolio, all right? So this portfolio is a testament to my dividend investing strategy. So right now, my next goal is going to be $300 a month from Dividend Stocks. It's going to take me a few months to get there, but I know it's going to come a lot faster now since, I have that 2,400 buffer. That amount is going to be going back into my portfolio every single month. Now I'm going to be breaking down my entire portfolio from the stocks that are paying the most amount of dividends to the stocks that are paying me just $1 every single few months, all right? So I have a bunch of those as well, and I also have stocks that are paying me. Let's take a look here. So we have Realty Income, all right? This REIT is paying me $421 in annual dividends. So REITs are a great investment, especially because a lot of people don't have $50,000 to $100,000 to put a down payment on a property, rental property, or commercial property. So that's why I recommend people start looking into REITs, especially if they want to have exposure in real estate. For me, I own 2 rental properties myself. I just actually came back from taking care of one and collecting payments from my tenant. But if you guys aren't experienced in real estate, just stick with a very stable REIT. REITs are great, especially if you want that monthly income. Realty Income is known as the monthly paying company. So go check them out if you guys want something really stable that's in the S&P 500. So the next company that's paying me the most amount of dividends is coming from ExxonMobil. The oil sector has been taking a gigantic hit over the last few months, and so that makes this one of the more riskier plays when it comes to my portfolio. All right, Russia and Saudi Arabia is this gigantic price war. I think crude oil right now is around $40. So yeah, it's roughly around $40, and we need to see crude oil be around $50 to $60 so that ExxonMobil can continue to pay its dividend. So there's a lot of factors that goes into that. And hopefully the economy is going to recover very soon. The rioting and looting is going to be over very soon. And things are just going to start speeding up and faster so we can continue to have our economy move along in a regular fashion. The next biggest dividend payer is an ETF. When it comes to ExxonMobil and SPHD here, these are the 2 companies and ETFs that I've been reinvesting in every single week. All right, so I put in like $300, $400 into these companies every single week on my Robinhood portfolio. So that's why I'm not going to be going over the Robinhood challenge this week. I'm just going to basically tell you that I invested roughly like $500 this week into ExxonMobil and maybe $100 into SPHD. All right, so these are slowly growing. And eventually, I think ExxonMobil on my Robinhood portfolio. So on ExxonMobil, I own about 58 shares. Last week, I had like 76. So soon, I'm going to be having 100 shares of ExxonMobil, and I'm going to cap that out when it comes to my Robinhood portfolio. So going back to SPHD, I'm getting around $281 in dividends. The next company is AT&T. That is paying me roughly $266 in annual income from dividends. And AT&T is a company that sooner or later down the line, I'm going to be buying a lot more. I want to get my AT&T up to 200 shares. AT&T has a relatively safe dividend score of a 65, so that gives me a lot of confidence into reinvesting for their dividends, even though their dividend is pretty high at a 6.33%. Going down the list here, PSEC, I'm seeing around $145 worth of dividends. And below that is AGNC, another $144 worth of dividends. So these two are the highest risk plays when it comes to my portfolio. That is why when you combine the amount of money that I'm invested into these two companies, it is only around $2,000. All right. So it's a very small position in my portfolio. I get a lot of heat for owning these two companies. So from PSEC and AGNC, I'm seeing like a $12 worth of dividends every single month from them. You know, all of that just goes back into my higher, safer dividends like Realty Income and AT&T. So that's what I do with my dividends. I'm reinvesting them. So going deeper down into this list, things are starting to taper off. These are now in the $100 and lower range, okay? VOO, this is the S&P 500. I talked about this in my last video about Roth IRAs. My Roth IRA is mostly comprised of VOO and BND, which is the Vanguard Total Bond Index, all right? These two holdings are a cornerstone of a really decent portfolio. I know a lot of people in the FIRE movement, financially independent, retire early movement, their entire portfolio consists of just these ETFs. A few people have it like that. So when it comes to VOO, I'm seeing $140 worth of dividends every single year. And BND, I'm seeing $103 worth of dividends every single year. Going down the list, we have Ultra Group, $45, VTI, $42, VXUS, the Vanguard Total International stocks, I'm seeing around $41 worth of dividends. JP Morgan, $30, IBM, $30, Douglas Emmett, $28. This is a new addition to my Webull account. DOW, I'm seeing $25 worth of dividends every single year. Starbucks, $25 worth of dividends. Walgreens, $22. Verizon, $22. Chevron, $21. Coca-Cola, $19. UPS, $18. 3M, $17. Cisco, $17. All of these stocks that I'm mentioning right now, they're in my M1 Finance portfolio. My M1 Finance portfolio is a lot smaller than Robinhood. It's actually almost the same size now, but for me, it's a lot smaller because I own a lot more stocks in there. I own 32 different holdings, so that's why it's a lot more diverse, a lot safer, but because of that, the dividends are a lot less. Consolidated Edison, I'm seeing around $16. Caterpillar, I'm seeing around $16 as well. McDonald's, $16. Nike, $15. Going down the list, it's starting to get very minimal when it comes to whatever it's paying out. And that's either because the dividend yield is so low, around 1%, or it's because I only have like less than $1,000 invested into these companies. So I want to go over some things that I've learned since I started this challenge in September 13, 2018. Whenever you're starting a dividend portfolio, make sure that you're just not chasing dividend yield. So I'm going to sort everything out here by dividend yield. I made a video about this last month, I think. And if you look at the higher the dividend yield is, the less safe that your portfolio. So if you take a closer look here, the higher the dividend yield is for these stocks that I own, the lower their dividend safety is. And that's just going to be it. You have to really weigh your risk and reward. Yes, we all want 10% gains every single year from dividends. I wish I could get that too, but you should not just chase that dividend yield. So that's why a lot of my portfolio, when you average everything out right now, my dividend yield is 3.8%. And yield on cost, which is a completely different thing, yield on cost is at 4.15%. This is because the yield on cost for me is a lot higher because I've been investing so much over March, April, and May. During those times, dude, my portfolio, a lot of these stocks were like 6, 7, 8, 9% dividend yields. And because I knew that a lot of those companies were very undervalued. That's why I just kept reinvesting in them. So there's been a lot going on over the past few months, and hopefully you guys have stuck through it and didn't sell your positions, because I know Beat the Bush, if you guys watch his channel, he just came out with a video trashing his entire house, flipping his sofa. This guy's going crazy because he lost over $40,000 worth of value from selling maybe 2 to 3 weeks ago when the stock market was just picking up steam. And right now, I think we're seeing just so much FOMO that it's going to be really difficult for him to jump back in. So Beat the Bush, if you are watching this video, just shout out, man. Just hang in there. When the dip comes, just buy back in. So the second mistake I think that a lot of new investors come across is, how much should we be investing? All right. When I first started, I was investing about $100 a week. That's all that I could afford at the time. And that is all that I was willing to lose, because when I first started, I was a complete beginner. Okay. I had very little experience in the stock market. I had some experience coming from the cryptocurrency market, where I'm now implementing a lot of my strategies from the stock market there, from like just a long-term investment standpoint. So when I first began, I knew that whatever that I invested, that amount of money was gonna have a higher chance and a higher risk of I was just gonna lose it. All right. That's why I invested only $100. That's something that, I'm comfortable playing around with and experimenting and learning with that amount of money. And over time, as I gained so much more experience knowing what is a good stock, what is a bad stock, when should I be selling something or when should I be buying something, all of those are going to come along with time. All right. Remember that time in the market is more important than timing the market. Right now, I know a lot of people are FOMOing into buying these stocks. It's a lot easier buying stocks when every single day you see the price going up. The stock value is just going to keep climbing and climbing and climbing. All right. It is a lot easier when everything is green, but when things are red, that is when I believe is one of the best times to jump in the market. But timing the market in that way, that is something for another video. So drop a comment down below if you guys want to know my thoughts when it comes to that. But going back to the main point here, I believe that when you first start off small. All right. If you can, you might want to go paper trading, but I think that having skin in the game goes a long way. For me, once I had like a few $1,000s in the game in the stock market, I knew like, I got to take this seriously, or, this could just be gone if I make a few bad investments. I could lose maybe half of it or maybe even all of it if I put it in the wrong stock. All right. So I'm going to stick to something safe. And when I have more money, maybe I can allocate like 10% to something that's unsafe. So that's exactly what I did. All right. So going into my dividend safety score here may be unsafe here. I only have 12% allocated to that. And that is going into, you guessed it, AGNC, Prospect Capital, and Wells Fargo. But this doesn't really count because I own such a small amount. But if you take a look at the other 90% of my portfolio, basically 90%, 18% is borderline safety, but this just happened recently. 50% here, 50% is in safe dividend stocks. And going all the way down here, 25% are in ETFs. But these ETFs, in my opinion, are more diverse and even more safe than owning an individual stock. So that's going to be my big tip for you guys, is to start small. And once your portfolio hits 10,000, 20,000, maybe then you can start investing, chopping off a little bit at the top there and investing it in some riskier plays. For my last tip is just to not sell. Okay. I'm being serious, man. Bandana's on here. Do not sell, especially when you think, it could go lower or whatever. Hold for the long term and just dollar cost average. That is going to save you a lot of money. Just to give you an example, if I sold, going into my Robinhood portfolio here, if I sold on March 23rd, and I just held cash the entire time, I would have lost my $10,000 that I was down, over 10,000. And on top of that, I would have lost all the gains from that time all the way till today. So go watch these videos if you guys want to see more about dividend investing. Go check out the links in the description for free stocks. Check out my portfolio to see what I'm investing in. Drop me a like, subscribe, hit that notification. I'll see you guys in the next video. Good luck investing. Bye.